Hey there. Thank you, David. I didn't realize I was on mute. Thank you for letting me know over on YouTube and Twitch. So you guys should be able to hear me now. Um, basically, just starting off here with what we did last week into this week, we basically went up, didn't quite get all the way up to 4,500 as that next big level. We kept stalling around 44.50, 44.60, which makes sense. Do you guys still not have sound? Let me know. One second, guys, in the small account. Make sure this is on the right mic here. Testing. Yeah, it should be good now, hopefully. Um, but in short, for the most part, we basically stalled around the 44.50 range. So kept hitting that, weren't able to get a strong bounce up. Then we got a bit of a reversal. Thanks, guys. Appreciate it. I was like, I see it's on the right mic. I have a few backup mics, but this one's solid. So appreciate the confirmation, y'all. Um, we basically stalled at the 44.50, 44.60 range, weren't able to break above it, dropped right back down into the hourly support of the 100 period simple. And then that held, right? So we've been holding that support. We tried again going into the end of last week to get back above those levels. We did start to break some of those intraday levels, like the ATR trailing stop. But once again, couldn't get back up to even the 44.50 range. We're kind of stalling and then dropped back down. And this morning, we are basically battling not only this technical support on the hourly chart of the 100 period simple of the ATR trailing stop, but it's also the psychological level of 4,400. So we do want to be mindful about that. And when I pull up SPX here on the daily chart, we are right at the 10 period simple moving average of the daily support level. So you can see where there's that bit of conflict where the market's just kind of stalling. Now, a lot of this weight that's being brought onto the market today is from the big cap names like Apple, Microsoft, of course, had a strong pullback this morning. Didn't like seeing that. Tesla's getting some of a pullback, Amazon. And so if you look at like the individual names, especially in things that are trading in RUT, for example, most of those are holding up pretty well, right? They aren't completely falling apart, especially if their chart pattern looked more like this, which is a bit bullish. But because of how big some of these companies are that are getting a pullback, mainly in tech, it's kind of weighing down the market. And so you're seeing that here on the intraday charts where we're really struggling to get any sort of bounce. The good news is we're not quite breaking anything yet, but we're still struggling to get that follow through to the upside. So in my book, if we do start to break a little bit more strongly below 4,400, do want to be mindful of the lows last week around 43.85. So you might be able to take a quick intraday trade down into that level if we break it. But otherwise, if we do start to get a bit more selling, it does match up currently with the momentum being below the zero line with room to move lower on the hourly chart. It matches up with the bearish signal on the compound breakout tool, certainly. And then, of course, from a daily perspective, we do have room to pull back into daily support of the ATR trailing stop in 30. And usually that's a stronger place to look at a buying opportunity. Now, SPX is no stranger to getting pullbacks just into the 10 period simple and bullish runs and bullish trends. But as we've talked about this year, the market has been relatively choppy. We've had a few short moments of trend moves either to the upside or downside, but for the most part, we've seen a lot of chop, right? It's taken a lot of energy to build up in the market, kind of like what we saw here, before we truly got a bit of a run going. And so now we're right back going into that consolidation. This consolidation is allowing momentum to get a reset again. We're getting some pullback signals like on the compound breakout tool. Wouldn't be too surprised that if this consolidation does continue to build into another daily squeeze, that would help build up that energy for maybe another move for a run to the upside, certainly, or potentially a counter trend move to the downside, but that's not what I'm seeing right now. But in short, would I be surprised about a pullback down towards 43.37 range? Not at all. If anything, If we are able to get that pullback and that hold support, that to me is going to make a really good buying opportunity because that's right by the lows that we had back here in late June. It would be confirming that we're holding support. If the Bollinger Bands are still looking like they are now, where they're coming up to meet the price, that means they're not anticipating a break of that level, at least not as of yet. And so that could be a better place to buy in than if you had done so here last week where you're kind of stuck at a price resistance level. And that's one of the things that's been quite frustrating this year, if I'm to be completely honest, is price support and price resistance. Because of the chop that we've been in, we've seen a lot of trades where normally in a bullish trend market, it would look good to jump in at that level and then play for the breakout to the upside. But what's been happening in this consolidation is we keep testing price resistance or price support and it wins out over all the other technicals. And so what ends up happening is usually what might be considered a good spot to jump in, you're jumping in right at the high for a call, right? Or right at the low for a put. And then you're stuck managing that. You're stuck, especially if it's a directional trade like a long call or put, you're stuck with the theta decay working against you and you're almost starting to trade off hopium, hoping that breakout comes sooner than later than sitting, having to sit through that pullback. So I would certainly prefer to jump in more to the long side if we can get that stronger pullback to break 4,400, bring us back down into that daily support level of the ATR trailing stop in 30, and then look to play that to the upside. So for myself, the things that I really want to keep an eye on this week and how they trade are the big names like Apple and Microsoft, right? Apple's starting to get that pullback here. You can see it's breaking its 10. Now, currently on this strong run to the upside, you can see the majority of the time, if you bought the pullback at the 10 period simple, that was usually a good place to buy for, the continuation move. But every now and then this year, we've had pullbacks into the 30 period simple. And you can see where that's usually made a much better buying opportunity if that price level can hold. So the question here now is we're starting to get that pullback into the 30, which is also currently in line with the ATR trailing stop. If that level can hold, that would be the better opportune place to buy in. The caution is a lot of these names on the weekly perspective are getting up to exhaustion levels. So the question about this move here, and this is true for a lot of the big names on the FANG side of things, is if we get up into this range, does the 30 period simple, the daily chart, end up breaking and we actually see a stronger flush or just overall chop? Remember, you don't necessarily need a strong pullback for momentum to reset. It can reset purely off consolidation. And so that's kind of the question that we have. We'll see if it gets answered this week or not. Could be affected by some of the news events this week. So let's go ahead and pull those up and talk about what we're seeing there. Um, so for this week, we do have some, it looks like a Fed's talking later today. That's always fun. But the big events this week arguably are going to be the CPI, right? We have the consumer price index. Both of those are on Wednesday. We also have some Fed speaking later in the day on Wednesday as well. I think one's speaking in the morning. Thursday, we have initial jobless claims. We have PPI that day. And so those are probably the two bigger reports coming out this week that we'll be mindful of. Now, normally, when we saw things like CPI last year with the market, they were big market moves, and you could actually plan trades around that possibility of a strong volatile move up or down. And it was a lot of fun to trade for those of you that were trading with me last year um, and doing those setups, right? Those were kind of the fun days. You were looking forward to the CPI days. You didn't really care how the market moved because we would set up trades based on volatility, not necessarily directional trades, but purely based off it getting a volatile move. And then it was a lot of fun taking profits off those news events. But what's happened this year, and you can see it a little bit more cleanly on this weekly chart, is we haven't gotten that reaction, right? For those of you who were following along with me in the mentorship, we had a few times where early in the year we tried to trade CPI like we did last year off the volatility, but it was not hitting the same way. Even when We had Fed news events with Powell talking. We might have gotten a little bit of it like daily volatility, right, on the intraday moves. But from a weekly perspective throughout the remainder of the week, we didn't get that follow through and volatility like we did last year. And so, because of that, right, it's kind of showing us that it's a different market environment than what we had last year. And so, those volatile kind of trades like the compound butterfly, I've put back in the toolbox. I haven't taken them back out. And really, that's helped save me money because, as you can see here, outside the recent break to the upside, we, for the most part, were in chop. Like I mentioned, we had little bits of runs to the upside and runs to the downside. But a lot of times we were stuck in consolidation or that trend move was a bit more gradual. So, unless you gave yourself a lot of time on it, right, that theta decay was not working in your favor. Or, of course, if you did theta decay style trades like credit spreads, then maybe that worked a bit more in your favor. But for us who likes to play a bit more directionally with like the long calls and puts or vertical debit spreads, you had to be a bit more mindful of where those entries were and still give yourself plenty of time to allow that follow through to occur. And most recently, off the Fed news, we know that there came some talk about potential rate hikes, right? I think the majority of the market and certainly Fed futures earlier in the year were pricing in that we would stop with the hikes and that we would actually potentially get some rate cuts later in the year. And Powell kind of poo pooed on that, right? He was like, nah, guys, y'all are too eager. That's not what we're looking at. And this most recent update, he even mentioned that we are looking for that possibility to actually get some more rate hikes later. Now, it did sound like, according to the minutes, that it was going to be a bit more gradual, right? They're not immediately just going to go balls to the wall and try to do something big again, that it would be a little bit lighter. But once again, of course, it's all going to be data driven, that fun phrase there. And so the question I kind of have for this week is, does the CPI report actually give us a bit of spark in that volatility again? Do we get some sort of clue like we did last year to where we might be able to take more of those volatile style trades and start to implement them again if we are being more focused on things like the inflation data or jobless claims and reports? Or is this kind of like a trick, right? Like a mirage, if you will, where we're anticipating this because of the talks of the rate hikes, but in reality, the CPI is going to be a non-event, basically like it has been the majority of this year. And I'm not saying, of course, that that's not a thing to focus on, right? It's certainly important to the economy. But for us, from a trading perspective, and certainly from an intraday perspective or things like that, CPI has just not been the market mover it was last year. And so to me, more of a non event. And so for myself, I'm not planning to take a volatile trade this week off CPI on Wednesday, but it is something I will be keeping a close eye on. And if we do end up getting a bit of that, at the very least, that intraday volatility, then I wouldn't mind taking an intraday setup to try and take advantage of that move and lock in some sort of profit. But outside of that, I kind of want it to confirm itself, right? I don't want to jump the gun, jump into a volatile trade, and then end up having to manage something because the reality is that it's still a non event, just like it's been the majority of this year. And so that's kind of my game plan around the news events for this week. Otherwise, in general, with the market and trade setups, if things like Microsoft, right, let's go over to Microsoft. Big drop today. So Microsoft in general, strong bullish trend. It's done a really good job for the most part of holding support. We were getting a reset on momentum, had a recent true low, have a squeeze. So all of this normally would want me to play this to the upside. But as you can see, the drop today, a bit stronger than what we'd like to see, certainly. It's breaking the 30-period simple as support. The good news about this for Microsoft is that Bollinger Bands are still coming up to meet the price. So they're not flaring open to the downside yet. They're not anticipating that continuation of a move lower. And if we were to go back and kind of look at this prior, we did have something similar to this. Now, it was before an earnings announcement. So earnings, of course, kind of helped with that narrative. But you can see here, similar situation. We started to break the 30-period simple, Bollinger Bands, though, weren't giving us any sort of leeway of flaring open to the downside, meaning it was making a hard line in the sand saying, I really don't think the underlying price is going to break this level, so I'm staying the course of being flat here. And then, of course, in turn, earnings ended up having a positive market reaction. We bounced up. That's where we got the flaring open of the Bollinger Bands. And then the continuation of the trend went higher. Now, the difference is, of course, we have time until earnings, right? Earnings isn't right around the corner to help give us that catalyst of an immediate bounce, but the technicals are still currently showing us the same thing. So what I'd like to see is this just a slight pause, right? A slight bit of profit taking, a down day. It allows the big boys to jump in at a better price level to once again play the fangs and these bigger tech names back to the upside and continuation of the trend. Or is exhaustion from the weekly chart finally catching up and we start to get a bigger pullback or get stuck in chop? When we look at this from a weekly perspective, you can see from a weekly chart, we have been running into some price resistance that we saw back here prior to 2022 at the end of 2021. So that's not really giving us any favors for us being bullish here. We are finally starting to get some pullback bars of momentum. Our bullish signal looks like it's officially attempting to cancel out this week. So we'll see on Friday whether or not that's valid. But if these bigger names do start to reverse, and if I want to continue to remain bullish in the market, then I need to probably shift gears and look at individual symbols on things in the RUT index, right? Things where that rotation out of tech may be going into home builders, right? Home builders had a recent good run up, and things like that, and get that shift and going over into those individual symbols to try and play to the upside. Otherwise, might be a bit aggressive, and we might want to consider doing things like call credit spreads. But otherwise, if we do start to see these exhaustion levels break and follow through to the back down, then we might actually want to consider shorting some of these bigger names, at least in the short term, until they finally find that support level that they decide that they want to hold, and then create that buying opportunity for us to buy back in. One of the symbols I've certainly, from a bigger name perspective, have been very cautious about trading to the upside here is Amazon. And the reason why is Amazon, though it looks great on the daily chart, on the weekly chart, unlike things like Apple and Microsoft that have started to go back into their bullish trends, Amazon has actually been still in a bearish trend until recently, where it got into consolidation with the 10 period simple trading in between the 100 and the 30. But as you can see on this recent run up, it's run right into the 100 period simple, which is resistance, and it's currently basically in a wedge pattern where the 100, we're having a really tough time breaking above it. That's currently at 129.49. And at the same time, on this pullback, at least for the day, right? Keep in mind this is a weekly chart, so we could break it throughout the week. But as of the day right now, we're still holding the 10 period simple as support. And so we're kind of finding ourselves in this wedge pattern. Momentum starting to get a red bar. This here is still technically a consolidating signal on the compound breakout tool. And so this could give us a clue for the other big names on which way we could break, right? If we start to break above the 100 period simple and it turns positive, then it might not be as big of a pullback. This might be a very short lived pullback, and we can look to still play the bullish sentiment overall, like we've been looking at. If, however, we start to break back below the 10 and get a stronger reversal off the 100, that could be our clue to look at shorting these bigger FANG names like Microsoft, Apple, and Amazon, looking either at things like call credit spreads where we don't necessarily need the strong directional move lower. We just work off the fact that it's stalling and let the theta decay benefit us and be our friend. Or if we do actually start to break levels, right, play it directionally with puts to the downside. And in the meantime, on those bullish trade ideas, switch gears and go to something like RUT, where you have a little bit more of a boost in that index, right? Compared to NDX and SPX, RUT has kind of been late to the game on this bullish sentiment. So in regards to what has quote unquote the most room it could run, I would say RUT does, right? We have a daily squeeze setting up. We had recent true lows, momentum's pulled back. It's currently in consolidation, so I don't know if this is the place I want to buy at price resistance because, like we've talked about, price resistance and price support have been a very difficult spot to try and jump in at trades. But if it pulls back down into support again, absolutely, I'd love to play it back up into here. Or if we can finally start to break really this 1900 level, if the Bollinger Bands start to open, maybe we get a little bit more bullish sentiment down here, then RUT might be the place to look for those bullish trends and for those individual names that trade within RUT to kind of be the bullish side of our account. So that is what I'm keeping a close eye on for today and this week. Would like to see how these individual names work in regards to what the Fang's going to do. And that, of course, depending on how they start to trade, will probably affect what symbols I look at and what sectors I look at to play throughout the remaining of the next few weeks or throughout the end of July. And of course, the second thing I really want to focus on is the CPI. And if the CPI does cause a bit of that volatility, not only from an intraday perspective, but to follow through for the remainder of the week, especially if that volatility is to the downside, then that could be a clue that we could start to see signs of what we had last year pick back up in the market this year to where we want to play those news events a little bit more closely than what we've done recently, where they've just been, a non-event overall from a intraday trader's perspective. So that's kind of my game plan for the week, guys. Of course, I want to look at new trade ideas. I am starting the $500 challenge fresh over for this month. So we've started fresh with a new $500. I am doing it this time in the Moomoo platform. So for those of you who don't know about Moomoo, it is a trading platform out there. It is one of, I would say, one of the platforms I have found to have a lot of great features on it. So if you don't know about it, certainly check it out. But if you see that pop up for a $500 challenge update, right, with a trade, don't be surprised. That's just the platform I'm using for this month for the $500 challenge account. And we'll go about it from there, certainly. But if you guys don't have any last minute questions, that is kind of it for me for this Monday market update. So just a quick recap, the things to be mindful of would be things like CPI later this week. Let's see if we get that volatility or not. Watch the fangs, right? Watch the high, big names in the market like tech, on the tech side of things like Apple, Microsoft, Meta, Tesla. See if they're able to hold up, if this is just a 1 day down day and a little blip for a buying opportunity, or if it's going to be a bit more dramatic. And if it is more dramatic, then we might need to look at shifting gears if we want to remain bullish in our accounts to look at things in other sectors like RUT, and specifically in things maybe like the housing sector or whatever sector is kind of holding up and where that money might be rotating into out of tech and into something else, and look at those for the bullish trade ideas rather than still trying to focus on Apple and the Microsofts of the market. So thank you guys so much for joining me. As always, may the trade be with you, my fellow Jedis. For those of you over on Twitch and YouTube, if you would like to join us, we are, I'm joining John Carter as well as Cody to talk about small accounts and how we have used those to grow in the past. So I just sent a link out. Check that out. It is a free webinar for Wednesday night. So feel free to join us and talk about the different ways and struggles that we've had in the past on growing small accounts and how we've overcome those to be successful traders that we are today. Otherwise, though, I look forward to talking to y'all later in the week. Bye, guys.